Good afternoon. On behalf of the management of Advanced Health, we invite you to a podcast regarding our rights issue, which is in the process of being implemented and which we would like you to have a bit more information relating to the same. Thank you very much for attending on behalf of various shareholders. And I would like to start our presentation by introducing you to Sneh, our CFO, who is going to give you further feedback regarding the financials, which we have continued to look through regarding the rights issue offer. Over to you, Sneh, and thank you very much.
Thank you so much, Mr. Chairman. Thank you. And I would look at the two categories being the current performance of our revenue for January and February. I would give you an overview from a group perspective and also for the two segments being the South African operations and the Australian operations. So year to date, overall for the group, revenue is up by 19% for January and February. And for South African operation, also up by 19%. For Australian operations, also up by 19%, 19% being our magic number. Management is very excited about this performance. We believe that this is a very, very solid performance under the current circumstances. We all know that there's COVID-19, and for the very same period in the prior year, we didn't have COVID-19. So it's a very strong performance, and we believe that going forward, our revenue trends should continue in this pattern. And we believe that the good times are yet ahead for Advanced Health. We are yet to see strong growth and strong performance for both the South African operations and the Australian operations. Looking at the proceeds that are coming from the rights issue, the maximum that is expected is 67 million rand that is expected to be collected from the rights issue. Out of the 67 million rand cash injection, we are expecting to settle a loan of 20 million rand, which belongs to our shareholder. We also expected to repay 10 million rand towards the ABSA overdraft. We also expected to reduce a backlog in our trade creditors of 10 million rand, which would leave us with at least 27 million rand in the business that would be used as working capital. So looking at the impact that the rights issue would have on our balance sheet, we've restated the balance sheet that was presented to our shareholders for the interim period that ended the 31st of December 2020. When we restated these numbers with the impact of the rights issue, and the asset, the impact is that we should get that cash injection of 27 million rand that I've spoken about that should come through, which would assist us to fund the working capital and also to assist to purchase some of the equipment that we have been unable to purchase in the South African operation as a result of the fact that we had liquidity issues. This would in turn assist to increase our revenue because obviously we expect a return out of the investment that we would make out of the capex. If we do not get the maximum proceeds of 67 million rand out of the rights issue, management is still very confident that we should have enough cash that will be retained in the business, given the fact that we're also expecting to get a 17 million rand out of the sale of the Velgelegen Hospital. The sale is expected to go through in April. We are expecting to get a cash injection there of 17 million rand. So we're very, very confident that there should be enough cash to keep the business afloat until a point where all our segments within the South African operations, or rather all our hospital within the South African operations are cash positive. So moving on, looking at the liability section and the equity section, the impact that the rights issue would have on the equity is that it would increase our share capital by 67 million rand. We expect a little bit of expenses that are associated with the rights issue of at least around 1 million rand that would impact our retained earnings. Then we would see a reduction in our liabilities of 20 million rand, which is that shareholders loan that I've spoken about earlier on. So there is a 20 million rand reduction there in the other financial liabilities. And if you look at the current liabilities, we see a reduction there of 10 million rand in the trade creditors that I've spoken about earlier on. And also we see that full settlement of the ABSA overdraft of a balance of 8.4 million rand. That was a balance that was as at the 31st of December 2020, leaving a balance of 0. So we see a very nice reduction in our liabilities. If you look at both the current liabilities and the non-current liabilities, it's a total reduction of 38 million rand, which would strengthen our balance sheet and obviously give us a very, very strong position there. If we look at the ratios, analyzing the impact the rights issue would have on the balance sheet, looking at the quick ratio, we see a very, very nice improvement there. Prior to the rights issue, our current quick ratio was a 0.77, which was a very, very bad ratio. And we see a very nice improvement there of a 1.13 after the rights issue. Exactly the same improvement is seen under the current ratio, which was at 0.89 prior to the rights issue, and now improving to a 1.26 after the rights issue. Again, a very nice improvement. If we look at the interest-bearing debt to equity ratio, you can actually see that prior to the rights issue, the interest-bearing debt was actually at 142%, more than the equity that we held in the business. And it's nicely reduced after the rights issue at 82%. Still not a very desirable number, but it's absolutely a very big improvement from where we are prior to the rights issue. Again, confirming that the rights issue is the right strategy. It's the right thing to do for our balance sheet. If we look at the current asset, a nice improvement there from 120 million to about 148 million rand when rounded off. Again, as a result of the fact that you've got the 27 million rand cash injection coming through into your asset, as we've seen in the balance sheet. If we look at our current liabilities, a very nice reduction again from 136 million rand there when rounded off to 117 million rand as a result of the fact that we've settled some of the creditors and also we've settled the ABSA overdraft. So a very nice reduction there under the current liabilities. If you look at the total interest-bearing debt, we see a very nice reduction there again of about 28 million rand as a result of the fact that we've repaid the shareholders' loan of about 20 million rand and also the 8.4 million rand from the ABSA overdraft. So a very nice improvement. The balance sheet definitely has strengthened. So thank you so much, Mr. Chairman. Over to you.
Sneh, thank you so much. And to our shareholders, I just would like to mention that we are happy to help with questions that you may have. And we are showing you the 2 email addresses that you can use for the asking of questions, and the parties involved will channel them to the right parties for a response to you on that basis. I would like to take you to our next step, and that was basically to look at the cost curtailment that we have focused on over the past year. And this cost containment focuses mainly on 3 areas of our business. And these are basically the 3 biggest cost elements in our business, being 1, our lease agreements for the properties that we utilize. 2, our salaries and wages, where we have reduced staff as far as practical possibly. And 3, our cost of medical consumables, which we are also working on to get better pricing and better value out of it for our investors. Coming back to these points, I just would like to mention that the lease agreements, we've spent a substantial amount of time in renegotiating these. We have been able to secure certain periods of free rental during the COVID-19 period. But apart from that, we've also been able to get the escalation rate of most of these lease agreements reduced, and also very often a more attractive base rental included into these negotiations. Overall, we feel confident that with 1 or 2 additional agreements that still need to be concluded, that aspect of our cost will be reduced substantially. On the other hand, we've also looked at our salaries and wages, which was a very harsh and a difficult situation, but we have been able to reduce costs substantially, and we are functioning now on a basis where we can say that Advanced Health is a much more cost-aware organization, and basically going forward into the future on a basis of a better and more cost-effective organization. We are also looking at the cost of our procurement, which is especially the medical and surgical consumables that we actually obtain. And we are in a situation where we are looking at better pricing structures, and this should help us to improve the finances as we go forward into the future. On this basis, I would like to hand you over to Gerrit van Emmenes, our CEO, and Gerrit will take you further through our presentation. Gerrit, thank you so much.
Thank you, Carl. Good day to everybody. I would like to address you on two issues. The first one is COVID-19, and the second one is, why are we excited and do we see a positive future and not so far down the line? I think we're talking about 2023, but a little bit later, I'll address you on that. Firstly, on COVID, I think COVID have changed the world of day hospitals, and we need to take a perspective on that. Firstly, let me address you on the current infections that is happening out in the country. We see a concentration of high number of infections in KZN specifically, but overall we're looking at just over 500 cases, new infections per day. That being said, it was less than 2 weeks ago, it jumped back to 1,500. So it is still very unstable, and we don't have fully a grip on a stable infection rate in South Africa. Combine that with three factors that will come into play very soon. We need to be conservative and careful about what the way would be forward. Firstly, we do know there's a delay in vaccines, and are they currently very limited available for healthcare workers like the staff in our facilities. Beyond that, there's not really vaccines available. The next thing that will come up is the Easter weekend, which is in a little bit more than a week. People will travel, and that normally speeds up the translation of the infection throughout the country, which is something we should bear in mind, but it's very likely going to happen at the end of the day. Lastly, the winter is looming, and that in itself is a very challenging time, as we saw all over the world, that the infection rates increase, but simultaneously also the people that pass away from the virus are higher than what we expect in summer and in spring. All of that being said, and we're looking out for what's going on, and we ask ourselves, what should we do? From an advanced health perspective, there's a very known expression in healthcare that says prevention is better than cure. In our specific case, it's very true. Our hospitals are safe havens in this time. What do I mean by that? It is very simple. We don't have admissions that stays overnight. We don't have medical cases. We test all our staff, including the doctors and the patients, for COVID before we accept them as a patient to be admitted. Over and above, the protective equipment and gear that the staff used make it a very safe environment for doctors to operate, for patients to come and have their operations or their surgery, their day surgery, their elective surgery done at our facilities. And that leads to the next trend that we see is busy emerging. We see that our doctors' behavior are changing. The doctors, firstly, who are existing doctors, who are familiar with our facilities, work more often in our facilities and conduct all the procedures that they can do there on a daily basis. We also see that new doctors are making use of our facilities. Specialists that have never used our facilities before are coming to our facilities and conduct their procedures there. This gives rise to a new dynamic under the specialist, and it helps a lot and it makes us exciting. But what about your insurer that should back you and make sure that you as a patient get the best treatment? We've seen also a lot more interest from the medical aids in South Africa towards day surgery. We see that they are exploring with us pilots and avenues to see how we can do more procedures in day hospitals than ever before. For them, it's a twofold issue. It's one of cost effectiveness, on which they can save you money that later on translate to lower contribution increases. But it's also a matter of quality that speaks to the safety of the absence of medical patients being admitted in our hospitals, but also that we render exactly the same quality in our theaters, if not better, than most acute hospitals. That all brings us to the point I would like to make about our future. Firstly, let's talk a little bit about the fact that Advance is no longer in business as usual. It's business that are unusual. We have conducted 6 same-day knee and hip arthroplasties in one of our facilities. That means you can have your knee or hip replacement the same day in our hospital, and you go home where you receive some care and monitoring of your pain management, as well as some rehabilitation, which makes it a lot cheaper than in a hospital where you stay for a couple of days. We're about to embark on a big project with these specialists, these orthopedic surgeons, to develop a full-on program and create a center of excellence that this could be done on a daily basis. We've also engaged with the medical schemes and make sure that we are on more networks and on more options available for members to use us when they need facilities like us. We have engaged with the military environment, and at the moment we provide to one military hospital daily our facility in Groenkloof to conduct their procedures while their theaters are undergoing upgrading and maintenance. As you can see, we have a lot of exciting things going on for Advance at the moment. That is not the end of the list. I'm merely sharing with you 3 very diverse sort of initiatives that we're taking and moving forward. Paul has mentioned to you that we will continue with our restructuring. That being said, we stopped the bleeding of cash flow, and we are attending to making our facilities profitable. Last year, in our financial year, we had 1 facility, namely Worcester, that was profitable. We will definitely, within this year, do 3 of these facilities to be profitable, if not more. What is more exciting is that all of us in the management team are looking forward to see the overall business profitable by the end of 2022, if not earlier. I thank you for listening to us, and I hope that you share in our confidence, our commitment, and our excitement. Thank you.
Thank you very much. Thank you to everybody who participated in this presentation and made part of it. I just want to add to what Gerrit and Snee said, that part of our cost in the past has been the bleeding of facilities, which cost us substantially. We have, in fact, reduced these costs by closing one of these facilities and selling another facility, which is also involved with an additional cash injection, which we hope to secure for the month of April. In short, we feel comfortable with our cash resources, and we feel substantially better about the future of this organization than what it has looked like 12 months ago. Thank you very much for being with us, and we are looking forward to a brighter future. Thank you.